What's up, Tim Sykes here, answering your questions. The question on the table is, should you just invest in companies that you know? Peter Lynch made this strategy very popular a few decades ago. It's very simple for a lot of people. You use Apple, buy Apple stock. You have a Tesla, buy Tesla stock. You use AT&T. I don't even think AT&T does well anymore. It does work for Tesla. It worked for Apple. You know, if you truly love a product, worked for Whole Foods, Lululemon, it can really work. But I would be careful because a lot of businesses that you think are good just because you use the product, not necessarily. I'll give you an example. Sirius Satellite Radio. Who here has Sirius Satellite Radio? Nobody. Two guys. 2 out of 5, right? Sirius Satellite Radio, terrible performing stock. In fact, there's an actual documentary, which I call a comedy, called Stock Shock. Show the little, screenshot of this. And it's angry Sirius Satellite Radio, like customers and investors. And they're like, everyone has a Sirius Satellite Radio. The stock is not going up. The short sellers are ruining it. And they come up with this whole documentary that there's a conspiracy theory of short sellers. I make some popcorn and I look at it and I laugh because it's the biggest joke. Sirius Satellite Radio did a good job with their product. They bought XM Satellite Radio. They combined. They took out their number one competitor. They own the market. The problem is when they took out their competitor and even building their technology, both of the companies were so heavily in debt. It's never been a good business. Never. I don't think they ever even paid back their initial debts because it costs so much. And the problem is like, okay, radio is useful. Everyone likes a radio. But when this technology was being really built out, the internet hadn't really been built out. The internet has taken off much more than satellite radio ever did. So that stock sucks. In the documentary, watch it, and you can watch people being very bitter. And they're like, someone is holding our stock down. No, you idiots, you're just unprepared. This happens a lot, not even just with big companies, but with small companies too. There's always these conspiracy theories, like someone is holding this stock down, and they go into all these Epstein conspiracy theories. No matter what conspiracy theories you believe, the market is always right for the stock market, okay? The market is not wrong. It's not like I know something the market doesn't. The market is telling you the price, accept it. If you try to invest in all the companies that you use the products of, whether it's Starbucks, whether it's Whole Foods, you'll probably do okay because, theoretically, you have good taste. I don't know you, but maybe you have good taste. People who have Teslas and Apples, they really fall in love with them. So it makes sense that they're going to buy the stock too. But at some point, there's too many people. There's too many shares. And the value of the company, no matter how many people are using the product, the value of the company does not go up. Give you an example. Uber, Lyft. I use Uber a lot. I own no cars. Once upon a time, I bought all my dream cars. It was my childhood dream. Then it got old very quickly. I sold all my cars. Very happy to have no cars, no, nothing holding me down. It was a lot of work. It might sound cool to own a Lambo and a Ferrari and a McLaren and all this stuff, but it's a lot of work and it's a lot of annoyance. Now I just Uber and I Lyft. I would not invest in Uber stock or Lyft stock. Their stocks suck. Just because you use the product does not mean that the stock is going to go up. Lyft and Uber, both of them, again, took on a lot of debt and they took on a lot of losses. While building the company up, they're taking on investors. They're like, it's okay, we're losing. It's okay, we're going to get to critical mass. They're trying to come up with new services. Uber Eats is actually more profitable than Uber. There's shipping? You know this? You guys know this? Uber shipping? Uber ships? I don't know what it's called. But that is more profitable than Uber. Even though there's millions of Ubers, there's also a debate whether the drivers are employees or contractors. There's a big legal problem. That really has screwed things up for the company. Not all successful companies are even profitable. I'll give you another example. FaZe Clan. Who here likes FaZe Clan? Terrible company. Terrible business. The stock is down 99%. All the FaZe Clan boys, like, they open the NASDAQ and they have their tats on and they're all like on t-shirts and they're like drunk and high. And they're like, yeah, we're opening the NASDAQ. Down 99%. FaZe Clan, still very popular. I actually like trading the stocks because I'll tell you this, with FaZe Clan specifically, because I like trading promotions, all the FaZe Clan members, they all have their own little social media. They all have their own like live streams and Twitch channels, and they would pump up their own stock. Questionable legality, but they would all mention the stock like at the same time. I guarantee you that there's like a text message conversation between all the top FaZe Clan members, and they're like, oh, mention the stock ticker here at this time. And FaZe Clan stock would spike like 20% in like 10 minutes. And it was so easy and it was so obvious. Sadly, that doesn't happen anymore. The stock is down 99%. They're losing like 50 million a year. Still a popular product. So don't just assume that a popular product or a popular group is going to be profitable. That said, like I like, energy drinks, Celsius energy drinks. I should have held that one. I invested in it because I loved it. I knew that energy drinks were a good business. If you remember, Red Bull got taken over for billions. Why can't I even think? What's that other energy company that got taken over? Monster. Monster Energy got taken over, billions. One of the best performing stocks of all time. Celsius, theoretically more natural. I had the stock in the single digits. It's now over $100 a share. So long story short, it can work, but don't think that successful stock investing equals, popularity in terms of the product. It's very, very gray area. It works with the biggest companies because Teslas and Apples, they have so much money and so many consumers, they can just launch new stuff. Just the other day, Apple announced their Apple Card, 4.15% interest on savings accounts. Blows away all the banks. We'll see how many people use that. I know Tesla's working on a bunch of other stuff. I think they patented like Tesla, was it a Tesla burger? Or they have Tesla tequila. So there could be different stuff. That could also just be like Elon Musk's hobbies. But long story short, Peter Lynch was very successful several decades ago. A lot of people like the idea of just investing in stuff that they use. I know that there's like apps where it's like, oh, you buy like a $20 gift card to Starbucks and then put like $1 into the stock. Listen, it can work. And if you know nothing about finance, if you don't want to be a trader, at least it gets you like watching the stocks, which are good. But don't expect to get rich anytime soon using that strategy. It's mainly for like big account holders. For me, I'm a small account kind of guy. I think that if you really focus on trading low price stocks and scams, you'll do better. I know this sounds crazy because people are like, why are you saying, trade scams and not invest in Apple? Because investing in Apple, again, it's such a big company. It's so difficult for it to go up 50%, let alone 100% over the course of a year or two. A scam, even if it'll be bankrupt in a year or two, can go up 50%, 100%, 500% in a day. That's what scams do. Scams are designed to go up so that they can enrich the scam artists. You don't have to be in on the scam. You don't have to, say like, I like the scam. You just have to accept the fact that there are scams, there are penny stocks, there are sketchy cryptos with dubious legality, and you just trade the volatility. It's legal. It's ethical. There's always going to be another scam. You're just trading the volatility. And I think that you also learn more, the ins and outs of finance by trading scams or sketchy stocks. I know this makes me like a bad guy. Like I like day trading. I like short selling. I talk about scams openly. I just don't care, right? Like I'm in this to try to get people to grow their small accounts. You're not going to grow your small account investing in giant companies. That said, if you catch a trend, by all means do it. I'll give you two examples. Peloton. Who has a Peloton bike or has used a Peloton bike?
Yeah.
Which guy?
Bowen does.
The British guy, of course, right? No American. No, I'm just kidding. Peloton was a huge hit during the pandemic. People needed to work out. Everybody with a Planet Fitness membership, they couldn't go to Planet Fitness, so they had a Peloton. Peloton's stock and their business blew up. Since the pandemic has ended, Peloton has gone back down to the gutter. Their business sucks. their stock sucks. Even Zoom, this is probably one of the best examples. Everyone uses Zoom. How many of you have been on a Zoom call? Raise your hand. Everybody, right? Zoom took over way above Skype because Microsoft bought Skype and then they held them back and they put them in the whole Microsoft evil empire and that killed all the growth. Zoom took off. Little startup. Everyone was doing Zooms during the pandemic. Everyone still does Zooms after the pandemic. Zoom stock went up a lot and crashed. Ride the hype by all means. During the pandemic, a lot of like disinfectant gel makers and mask makers spiked big. So you're like, oh, I'm using masks. I'm going through all these masks. I might as well invest in a mask maker. By all means, ride that wave. Just don't overstay because now the pandemic is over. There's not as much disinfectant. There's not as much masks. You really have to be a trader, okay? Peter Lynch, great guy many years ago. Not many traders back then. The internet was very new / didn't even exist when Peter Lynch in his prime. These oversimplified strategies, they just don't work that well. Same thing with like, I guess probably the best example, which I haven't even talked about, is crypto yet. Like if you use crypto, you're like, oh, I paid for this with Bitcoin. I love Bitcoin. I hate American banks. I hate the banking crisis. Let me just invest in crypto. Be very careful. First of all, I have to mention, I don't trade crypto. If you think you're talking to me on WhatsApp, Telegram, Discord, you're not. I'm never going to try to get you to open some shady crypto wallet. Every single one of my imposters, guess what they use? They use crypto because the laws are all gray area. So I stay away from crypto just because there's so many scams. That said, should you trade Bitcoin? Should you trade these altcoins? Right? Like if you use them, if you believe in them, if you hate the banking, the whole infrastructure, if you hate Wall Street, if you hate the government, crypto's your play. Not necessarily. A lot of other people are thinking that too. And most crypto people are hodlers. I'll save this for a whole nother video because you can debate the ins and the outs. But don't hold anything too long. That's probably the best lesson. Even though crypto has gone up a lot, it also has like drawdowns of like 70, 80%. But some people, they're like, no, this is the future. And they're risking so much. Michael Saylor of MicroStrategy, just a software guy, already a billionaire because of MicroStrategy, used to give amazing parties in Miami Beach, crazy parties. Then he got into Bitcoin. I don't think he's given many parties lately. Maybe he has. Maybe I'm just not invited because I talk crap about him. But he held crypto all the way up, all the way down. He was actually up several $1 billion at crypto's peak. He didn't sell any. Then he was down 1.5 billion at its bottom. He got thrown out as CEO of his company. Bitcoin has bounced a little, so he's only down a little bit. But long story short, if you believe in a product and you have a multi-billion-dollar profit, take it. Take some of it. Don't just hodl. Don't feel like you have to go with the crowd. This is the big thing that I haven't talked about yet. It's not just about the money that you make or lose on any investment. You want to do your own thing. There's a problem when people love Apple or they love Tesla or they love crypto and they see everybody else doing something and they follow the crowd. And they forget about risk management. They forget about planning. They forget about their own individual goals. They want to be part of the crowd, right? Look, everyone here is like on bowling night. It's like Tesla bowling night. We all park our Teslas out in the, in the parking lot, and everyone's excited about all these new, Tesla features and like what is that? What is that truck that's coming out for Tesla? It's the Cybertruck that's been delayed. But everyone's in it together. And I see this too in trading chat rooms where everyone likes to trade together. Don't fall for the group. Don't fall for the herd mentality. All of my millionaire students and myself, we are self-sufficient. We don't follow anybody else. I know it's more fun, right? You're all invested in the same company. You all have the same car. You all use Apple. I use Apple not because it's necessarily the best, but because I airdrop files all the time. I take so many photos and videos. Life would be miserable if I wasn't in on the airdrop party. Is there a way to transfer files yet on non-Apple? Is there a competitor to airdrop? I don't think so, right? So I have to do that. And if you take a lot of photos and videos, you should have an Apple because everyone else has it and you just need to be part of that just for your job. But be very careful when everyone else is investing similarly. Because let's not forget the ugly industry stats. 90% of traders lose. 70% of investors fail to beat the S&P 500 every year, which is up a lousy 8 to 10%. So if you're following the crowd, if you're doing what most people do, you will not make money. You will not succeed. In 2022, the average trading account lost 44%. Average. That means some people lost 20%, 30%. Some people lost 80% or 90% or 100%, especially if you're in crypto. My top students and I, we're pretty much all green on the year. Plus or minus like 2 or 3 or 5%. No one I know had like a record trading year in 2022, but you didn't have to lose. And you certainly didn't have to lose half your account. But again, with crypto, there's this whole like clan mentality where you have to invest together, you have to hodl together, you have diamond hands together. I have paper hands. I have paper mache hands. I have no loyalty whatsoever to any investment. And I think that that's probably the best way that you should trade too. When you get into this group mentality, again, whether you make money or lose money, you're just not yourself anymore. You don't learn what works for you. We're all different. How many people are in this room? 6?
Yep.
6 people. We all have different personalities, different strengths and weaknesses. Doesn't matter if we all agree on Apple or Tesla. We should not all invest and trade the same. Reality, okay? I have the patience of an ant, a freaking ant. One of my best performing strategies is just because I buy a stock on a Friday and I sell on a Monday. And the only reason I'm holding that over several days is because the stock market is closed on the weekend. That's the only reason. And even I screw up sometimes. I buy a stock on Friday and I'm up like 5 or 10% and I take my profits. And then Monday I'd be up like 20 or 30%. But I have the patience of an ant. I recognize that. You have to do what works for you. And I really can't encourage you enough to study everything that you can. Find what works for you. Don't rely on others. If investing in a big company and holding and being part of like a crew makes you happy, by all means do it. If there's added benefits to like being a Tesla investor or Apple investor and there's cool little meetups and cool little groups that you want to be a part of, by all means do it. Just don't expect to be very successful by taking on a strategy that everyone else is doing. When you know, and if you study enough, that most strategies do not do very well. These overly simplistic strategies in the market, you're just not going to become a millionaire anytime fast. And for me, that's the beauty of the market, okay? I do think that you have the potential to become a millionaire. I do think that you have the potential to achieve more than you realize. I don't think you have to lose 44% in any year. I don't think you need to go with the crowd. Maybe that's just me. I was a philosophy major. All my friends were business and finance majors. I still love business and finance, but I learned about philosophy to think differently. I think that there's a huge benefit in thinking differently, not just in terms of your wealth, but your happiness, your self-sufficiency, your self-confidence. So long story short, do what you think is best. If you want to invest in a big company or invest in what you use, like let's say you have like a Gillette razor, you have a Celsius energy drink, you have a Starbucks for lunch, you eat at Whole Foods, you drive to Whole Foods in your Tesla, you go home and watch, Apple TV, and then you use, HBO Max, or then you use Roku, and you just want to invest in all those companies, do it. Just don't expect to be very successful doing that. And I do want you to be successful. So leave a comment. Let me know what you think. Let's see what brands you like. I know that Apple and Tesla stocks have done well, so I get it. It's a very popular thing. Just be willing to think differently. I think that you'll be pleasantly surprised if you do. Cheers.